traders, this is Rich, Breathingwiththemarkets.com. Today is November 20th, 2025. I hope you did well in the market today. Market was aggressive, out of the chute, back and forth. Gotta love it. Let's check it out. Let's go ahead and take a look. I had one account get away from me this morning, too much in profit. Could you imagine too much in profit? It wasn't a funded account, so there's never too much profit in a funded account unless you just don't snag it and bag it, right? But let's check this out. See the top account here, ending in 5512. Today's profit was $19,310 and running. This was just a snapshot, over $20,000. I think 25, 26,000, I don't remember, but it was fluctuating back and forth. I can only have 4,500 on this account for the day, and it got away from me. But if it was a funded account, that would have been great, right? 15 minis in the market, and took it for a ride, and it slipped away from me, and went way into profit fast, too fast, and didn't turn around and look back. Literally had to wait for the market to turn, hoping that the market would turn right in my direction, just so I can get out of the trade with some decent profit of around $4,500. Let's check out the final number. Here we are, account ending in 5512. The final number ended up being $4,446 for the day on that account. Once again, the account got away from me and went too much profit, so what do? I want to talk about a little bit about finding your lane. A lot of people misunderstand what finding your lane is. Finding your lane does not mean come up with your own strategy. Finding your lane does not mean do something different than others or finding something that works and you destroy it by leverage. Finding your lane is your financial needs, your financial goals, okay? And it has to do with a skill. A skill set is number one. A skill must be obtained first. It's not how much I need to make in a day. It's not how long do I need to hold these trades. None of that applies. If you're using a stop loss, you're gambling. If you're using a TP, you're typically gambling. What do I mean by that? The other day I used a TP. I left the house, right? I was in profit. So rather than me blowing that account, I left the house. I was in profit, short and pre-market. So I just had the stop a little bit below my entry, right? So in case the market turned when I was away, and price came down and literally just barely missed my profit target, right? I didn't have a profit target there because I figured out where the market was going to go. That's not why I had it there, okay? Because the market doesn't operate that way, all right? So I wasn't some hero that it just missed my profit target like what other people want you to believe, okay? I moved it down to give the room, to give the market, I moved the profit target down at a reasonable price, about $1,000. It's not much. And that's just the reason I moved it down there. Whether the market actually hit it or not, I wouldn't know that at the time because I was away and I could not manage that trade. Now, I would have managed the trade differently because I'm a scalper and I would have bagged it, hit it again, bagged it, and hit it again and bagged it some more, okay? But when you're away and you don't have a TP or a stop loss or something to save your account, then that is gambling, right? I mean, you can say that's gambling. But if you are actually managing that trade, managing is not guessing. Managing a trade is the risk starts before the execution of a trade. It's that simple. If you don't trade objectively in the market, you're fucking gambling. Period. And I mean 100% objectively in the market, right? If you don't see a fastball coming in the strike zone or a curveball, slider, or changeup, and it's not in the strike zone, you're not swinging at it. The probabilities are not high. It doesn't matter your skill level, right? So when you see a fastball coming in the strike zone, your skill level is going to kick in to gear, and hand-eye coordination is going to kick into gear, and you're going to smack the hell out of it, right? Probabilities. But if you're swinging for the fence and you're always swinging for pitches outside of the strike zone, how can you be successful, right? Even if the ball's in the strike zone and you don't have that skill level, how can you be successful at it? You have to work on a skill. Yes, it is a skill, traders, to understand the market and to analyze the market before you execute the trade. That is a skill. Nobody's going to tell you. And if they're telling you, run. You don't need somebody to tell you how to trade. You need someone to mentor you that understands the market in an objective way, that understands that they can methodically teach you over and over and over again the same thing over and over until you gain that skill. whether it be finding gems in the market. Is that a skill? Yes, it is. If you can't locate a gem in the market, you don't have that skill. You don't have the knowledge and you don't have the skill. Because when the market's moving, different psychological things can happen, right? And the lower time frame you go on, it happens faster and faster. Gems print faster. The market moves and changes faster, right? So the lower time frame that you're on, the better skill you need to trade. It's a fact. You can sit up on a daily and claim hero to zero all day long. What's so hard about trading a daily chart? Right? If you understand how the market moves in the first place, it's easy and it's boring. But that's not trading. That's investing. It's investing. Pushing the button is not trading. Executing trades is not trading. Trading is having a methodical approach that is objective, that you can go back in history with a number of things and tools that are in place and gems, and to analyze a market 110% prior to the execution of a trade, which gives you the highest probability to be successful at trading. Not at gambling, not at wishful thinking, not a hunch, and not intuition. Yes, you can do it. If you had the appropriate education, anyone can do it as long as they were able to learn and had the capability to learn and repeat the things that are taught. If you can repeat it, it doesn't matter how tall you are, how big or small you are, whether you're a male or female, it doesn't matter. Trading is a skill that anyone can do as long as you have the capabilities of learning and applying and repeating. If you have the ability to learn, apply, and repeat, and execute the trades in a methodical way, you can be successful at it. Yes, why not? Why would anyone say you can't? Why would anyone say 99% of the people cannot do that? If that was true, then we wouldn't have doctors, lawyers, all of this stuff, politicians, whatever it is, right? Take the odds. The odds are against you from day one, right? The odds are 100% that you're not going to be profitable from day one. But when you start to build the foundation, from the foundation, and have a foundation that is solid, based on objective movements, based on objective evidence in the market, once that foundation is set, you must continue to repeat and enhance that foundation so you can grow. It's pretty simple. Simplicity is having a methodical system in the market. Simplicity is not just pushing a button. Simplicity is not looking for a high or a low and claim that there's buyers and sellers in the market and that's why the market went down. Simplicity is not telling a story about why the market moves when you don't have any fucking information as to why the market moves. The market's fake, okay? So forget your buyers and sellers that are pushing the market up and down, okay? Because take NVIDIA, for example, right? Take NVIDIA, for example, up 9 or 10 points today. And disclaimer, I'm not giving any financial advice, as usual. This is a Skill First channel. But the point is, if you have the knowledge and you understand the market, and you can look at the market in a methodical way, with objective evidence in the market, something that any stranger, any teacher, any student, male or female, can identify the same thing at the same time if they're on the same time frame, looking at the chart at the same time. Can you do that? Do you have, and are you following a guru that can actually and objectively show you, that can actively show you objective evidence in the market, where hundreds and thousands of people can see the same thing at the same time if they were looking at the same chart on the same day, the same minute, and the same symbol? You get it? Because if I didn't keep saying same, some clown out there would say, you left something out, and they would still say that. But they're not going to make it in trading anyways. I am here to get back to the community. You must be able to trade objectively in the market. If your gig is to rack up the account and see how high you can get the account to get the highest payout, well, then you're in your own lane. It's not a challenge for anyone, right? It's not a challenge on who took the biggest payout or who took the littlest payout or who took the most payouts, right? It depends on what your gig is. It depends on what your style is. It depends on what you want to do and what you want to accomplish. And it also depends, most importantly, on your financial situation. Because trading does involve risk. Nothing is ever guaranteed, but one thing we do know is probabilities. Trading is about probabilities. You either have shitty probabilities and a bunch of money coming in, or you have high probabilities and you have a high hit rate. Those who trade in an objective way with objective evidence in the market have the highest hit rates. And I'm not talking about 1 or 2 trades a month. I'm not talking about 50 trades a month. I'm talking about thousands and thousands of trades in a month with a high hit rate. Let's talk about hit rate. If you're green every day on an account, hypothetical, and you have 85% hit rate, more than likely that's because of slippage. So if you're green on an account, not to say you weren't down 1,000, but let's talk about being green, because you're going to have some guru that has a solution to every problem, but is the actual problem. Make sense? The person that created the problem can't fix the problem, right? The person that says, just take a bounce. The person that says, I use a DCA or hedging or a stop loss to manage risk is gambling. That's not how you manage risk, traders. You don't manage risk using a stop loss. You don't manage risk hedging. You don't manage risk DCA or adding into positions or taking out of positions. You manage risk by the execution of a trade, understanding that risk starts before that process. If you have a number of steps to analyze a chart, and you don't process and you don't follow those steps to analyze the chart, your probabilities continue to go down. It's a fact. It's a fact. I'm not talking about windfall trading. I'm not talking about dumps and pumps where you claim you made $50,000 in a day, but you'll never ever do it again because you don't know how to trade, right? Unless you get lucky again. But when we talk about a sport, when we talk about trading, we talk about a professional sport, and trading is a professional sport, right? When we talk about the highest probabilities, you have to have evidence in the market for that. It's not from your brain, okay? It is mechanical. We don't know what's going to print, but what we do know with a high probability is when we can start to call out candles and what we want next, and then that appears, and what we want next, and then that appears, and then we want what happens next, and then that appears, and we get in with a bunch of objective evidence in the market to take a long or short with the highest probability. The key word, without over leveraging. You can have the direction right. You can have everything right and have a pure objective trading system. If you over leverage and you have a trailing drawdown, it's not going to work. Won't work. Slippage is going to eat you up, right? Slippage is going to eat you up. Now that's the risk that people take, right? Because you can't really have it both ways. If you're trading with a prop firm and they have a trailing drawdown and you're not taking those profits that are fluctuating in the market, allowing it to breathe, that could be hurting your P&L. If you have an objective trading strategy and you don't over leverage and you have the direction right, then why are you getting out of a trade? Why are you smacking the close button? Because you can't handle $200, $300, or $1,000 drawdown. If you can't handle that, get the fuck out of the market. Get out of the market. Because you're over leveraged, right? Because if you weren't over leveraged and you had $1,000 in drawdown, then we wouldn't be having this conversation. You would understand that you sized in, yeah, you're gonna have $1,000 negative drawdown. Might not be for, 4, 5, 6 minutes, right? But it's a high probability that you're gonna go into drawdown as soon as you press the button. The market breathes. The candles breathe. The 1 minute time frame breathes. They don't just keep going in the same direction. And your fill orders are different. The market orders, limit orders. You can't just keep doing a market order and all that bullshit on a 1 minute time frame unless you're swing trading. I'm trying to swing trade on a 1 minute. This is where I want price to be. I let price come to me because I'm the almighty king. Full of shit. Okay? Let price come to you, right? Executing a trade is based on objective evidence. If you're wanting price to come to you, what evidence do you have that price is going to go there anyways? Geez, that's a thought, right? And if you think price is going to go there because you want it to come to you, why aren't you in the trade anyways? To get down to where you want it to go. Well, I'll tell you why. Because they don't know how to trade. They do not know how to trade. They know how to gamble and guess. right? Think about what I'm saying. Use logic. Listen to what I am telling you. Listen to what I am explaining to you. I am trying to explain in simple terms that just pushing a button, trading highs and lows, looking left for zones. Why would you look left for any zone? Why? What is a zone? Ask yourself. Define a zone. Trading in the zone. What's a zone? What does a zone look like? And why does it, who called it a zone? Does this zone work with a high probability? Is that zone the same all over the charts? It's not. And therefore, it's not objective. It doesn't repeat. It's a matter of opinion. Opinions are worthless. My opinion and your opinion doesn't matter. We're entitled to our opinions, but we're not entitled to our own facts. The facts are the facts. Price moves up and down. Is that a fact? Yes. Horizontal lines are created because price moves up and down. Is that a fact? It's only a fact when you put a horizontal line on the chart and you convince yourself that that's the magical line. Why? Because that's a 4-hour chart. That's an 8-hour chart. That's a 12-hour chart. 12-hour chart's got some zones. Really? What makes your zone so special? No one can answer that. What makes your zone so special? You've been fooled, traders. You've been misled, whether it's intentionally or unintentionally. There are fake gurus out here that believe they know how to trade, but haven't admitted to gambling. And there are some who admit to gambling and then try to say that they're not gambling. Just push a button. Simplicity. Just take a high or low. Go to any chart. Draw a horizontal box. When it rejects, or if it doesn't reject, just take it short. 50%, whether you're going to win or lose. Or they talk about big numbers or small numbers. They talk about a small number, $25,000 stop loss, a $50,000 stop loss, $100,000 stop loss. Some claim to use stop losses, but don't actually use them. Think about it. Oh, I managed my trade. I had a $100,000 stop loss, and as it was getting to $15,000, I didn't like the way the market was moving, so I got out. That's called risk management. What a tard, man. What a tard. 15 grand. And they had a stop loss, a $100,000 stop loss. If they believed in the trade, why didn't they allow the trade to work? Did anyone tell this guru that price goes up and down and price is going to fluctuate, and therefore the money and the stop loss and the profit is going to continue to fluctuate, right? The market breathes and contracts, right? And people don't have a clue of how the market breathes. Why? They weren't taught. They don't know. They were not taught. They don't have that education. Come on over to breathingwiththemarkets.com and I will show you a methodical approach to the market and how the market breathes. I will show you that. And you can go back in history and find it. 25 years, 30 years, 50 years, doesn't matter. If the market's going up and down, the methodical approach that I teach will last a lifetime. It's pretty simple. And if the market turns and starts to go sideways, we can still trade it. We can still trade it. And I teach and tell the students what would happen. It's very simple. As long as something is moving, it's tradable. But people don't know how to trade it objectively. And that's the problem. Gambling is using a stop loss. Gambling is using a fixed TP for whatever reason. Just because you have something that's visually on the chart, a TP, right? Or a profit target, doesn't mean that that's your style of trading. Because if you think that this is where I want price to go, this is where I want price to go, I am going to target that high, I am going to target that low. That's not how price works, traders. Because remember, we have seconds to daily to weekly to monthly, yearly on a chart. Thousands and thousands of seconds and years and days. What makes you think your zone is the zone? We at breathingwiththemarkets.com teach you how to take a methodical approach to the market. It doesn't matter where it's going. It doesn't matter if it's going up today or down, sideways. It doesn't matter. I teach you how to analyze the market in an objective way that you can go back and study the market. You can study any pair, any symbol, and you can start to analyze each and every market, doesn't matter what it is. And once you can analyze the market with a methodical approach, you can start to execute high probability trades. If you are gambling and over leveraging, then you're not going to make it. There's a high probability you're not going to make it. And it's not a recipe for success. Remember, don't over leverage. Allow the system to work. I do not teach an edge or a strategy. I teach traders how to analyze that entire market and take the highest probability trades using an objective system with objective evidence in the market without your opinions. Come on over to breathingwiththemarkets.com and I will teach you one-on-one. You will gain that skill for life. Peace, traders.